Hello, this is Justin Paolini, trading performance coach here at Building a Trader. Welcome to the first episode of Tales from the Trenches. Before we start, let me just go through the risk warning. Trading foreign exchange carries a high level of risk and may not be suitable for all investors. The high degree of leverage available can magnify profits as well as losses. You can lose more than your initial deposit, so before trading, please carefully consider the risks and the entering costs and seek independent advice as required. Please contact us to discuss any questions or concerns you may have because we are here to help. With that said and done, today I want to talk to you about the very basics of trading. The desire to trade. You want to trade, so let me tell you what trading is all about, who should trade, what skills you learn as a trader, and some examples to really clarify the principles behind successful speculation. So trading is risking money to make more money. Okay, but what we need to clarify immediately is that there's this common belief that trading is an easy way to financial freedom, and that is just wrong. Most likely, if you're not careful, trading will take money away from you. It won't give you any money unless you approach it the right way. As an employee, you know that at the end of the month you'll get your paycheck. But as a trader, there really is no guarantee that you will ever get paid, and it takes a fierce commitment. It takes total accountability and grit to be profitable in the markets. So it's very similar to creating a startup business and reaching that break-even point. It's also very similar to being a professional athlete. So it is challenging. It requires dedication, and your entire career is basically based on your best guess because there really is no certainty. Now, not too many people can accept this reality. But nonetheless, there are many upsides to learning the skill of trading the markets. So let's talk about who should learn about trading and who can pursue a trading career because they're different things. Okay, so who should learn the skill of trading? Anybody who is interested in global geopolitical developments should learn about trading. Anyone who is interested in the financial markets, of course, should learn about trading. Anyone who likes games of chance like Texas Hold'em or Bridge or any of those more elaborate card games, Hearts, for example, you know, or all teenagers that want to pursue a career in finance, because of course that's directly inherent and it's interesting for any potential employers down the road to actually see a youngster who already has experience in the markets and a track record. That'll put them way ahead of any of their peers who are just going through university with an academic perspective. Being in touch with the markets gives you a hands-on feel and hands-on knowledge of how the world really works. So there are some upsides to learning how to trade. But if we're talking about a professional trading career, if we're talking about actually wanting to dedicate time, to take time out of your day, okay, now remember that time is our most precious commodity, and we need to use our time in the best way possible to live our best life. Okay, so that's different than dedicating your time to something just because you think it can make money. Okay, there are two different things, and we'll talk about that in the future, but right now, who can pursue a trading career? Anyone who has a stable day job and has a spouse that can pay the bills, or anyone who, for example, has been laid off because of COVID, but still has a spouse that's working and that can pay the bills, allowing him to spend time each day learning how to trade, studying market behavior, and gaining the relevant experience on a simulator, on a demo, more like, or Forex Tester, one of those platforms. Because it takes time to learn this. And even if you come through my coaching, it'll take at least 3 months of intense practice to to learn the ropes and to become minimally consistent, with the trading strategy. But now let's talk about the kind of skills that traders develop. Okay, and we're going to talk about this from a headhunter's point of view. Okay, because like everything else, there are trade-offs in life, and learning how to trade, dedicating your time, your precious time, to learning how to trade has to be weighed against alternatives, right? Because there are trade-offs. So how would trading look on your CV? What does trading actually give you? What skills are there? And can you use these skills elsewhere in life? I would say that learning how to trade, professional traders learn skills that make them, or that can make them, better human beings. Because the first thing you learn is humility. Traders will learn that being right is not as important as making money. There are two different things. Traders learn to differentiate between luck, skill, good habits, and bad habits. They learn that it's much better to admit being wrong rather than being dead right. Okay, because if you try to be right and you go down the wrong path, because there are so many traders that in order to have a high win rate and feel like they're right, use some very dangerous money management strategies, and they use some very dangerous trading strategies, and eventually they blow up, and it's all a matter of ego and wanting to be right. So professional traders learn humility, and being detached from whether you're right or wrong on any given trade. That's hard to do for a lot of people. Then they learn discipline, because traders learn how to stick to a set of habits that enforce high performance. And the high performance you use in trading is high concentration, being in a good mood every time you sit down and you're preparing yourself, and a high degree of self-awareness, because you need to realize if you're not 100%, or if you're tired, or if you're frustrated, or something else happened in your life that is impacting your capacity to follow your habits, to follow your rules. This is very similar to what a professional athlete needs to do. And then grit, okay, or resilience, because traders learn to take a series of losses, okay, a series of hits, being wrong many times in a row, and still standing up and taking that next trade, still standing up, believing in what you do, and knowing that this is just a temporary setback, not giving up, not changing systems, okay? So grit and faith, I would add, allow a trader to persevere even when the odds are against him. Traders learn how to follow a process and focus on that process. They learn how to think in probabilities, okay, which requires risk intelligence. Look it up. There's a book on that. And they think in terms of systems, because for traders it is the process that will yield the results in the long term. Okay, so the money that everybody talks about when they think about trading, money will take care of itself if you focus on developing the process. Everything goes back to the process. Patience. Traders learn patience. Why? Because we have to wait for the market to offer us our setups, to offer us those situations where we can deploy our edge. As traders, we learn to compound boring results over time. It's not about getting rich quickly, it's about getting rich slowly, because the power of compounding is tremendous if you make it work in your favor. And this requires consistency. It's not spectacular, it's not sexy, it's just boring and consistent, but it gives you a longevity that allows you to survive and learn and enhance your process and become a better trader and all of that. And then accountability. So important. Traders learn to be responsible for their results. They don't whine, they don't complain, because the results in trading are directly proportional to their trading skills and the capacity to execute those skills. So if you're considering a career in trading and you want to trade, you want to know whether you can trade, whether you've got what it takes, Here's a checklist that I made up for you. You can't trade if you need money, so make sure you have an income and learn to trade around that income. Okay, learn to trade around that day job, and remember that your day job and your human capital is your most important asset at this point in time. Then, you can't trade if your priorities are elsewhere. So, you need to commit at least 1 year to this journey and allocate as much time as possible every single day. Remember Malcolm Gladwell's 10,000 hour rule? Well, you got to become an expert. You have to be there, sit in front of the screens, learn how the market moves. Like we said before, you can't trade if you have an ego. So you must learn to lose well and remain detached from the markets and think in terms of probabilities. My personal suggestion is that you get help as soon as possible. Learn from me. I tried to go about this alone, and I went through years of pain and suffering that's just useless. I mean, I'm here for you. I'm here to really help you become a professional trader, if you have the right conditions. So don't waste time trying to soak up all that other information out there. It's not about intelligence. It's not about knowledge, okay? It's about knowing the skills that will help you, and I can help you there. I can teach you those skills. And then start trading on a demo, okay? Don't follow everybody that's going on Robinhood. Don't follow, what common traders or your barber will do, just throwing money at the markets because stuff is going up. Okay, this is a skill. Until you have demonstrated for at least 3 months on a demo account or a simulator that you have the skills required, you don't risk real money in the markets. End of story. So now let's talk about, let me give you some insight on what trading actually is in terms of a job. One of the best ways that I can convey this is with this question, which is on my questionnaire. So you're given a choice between buying two assets. Okay, asset A, you expect to return 7% over the next year. Now asset B, you expect to have more of a random return. It can go up, it can go down. Now both assets are highly correlated to the S&P 500. Okay, so they both have a high beta. They both act as a stock basically. Now you have to hold both assets for 1 year, but asset B allows you the opportunity to time your sale, but asset A doesn't. Okay, so you have to hold asset A for the whole year, and it will give you 7%, let's say. Asset B, you can time your sale, okay, but it has a random return. Which asset has the higher expected return mathematically? Which asset would you buy, and why? Now the answer to this question, as I hope you would have understood, is asset B, because you have the possibility to time your sale. Okay, whereas asset A, to get that 7%, you need to wait the whole year. With asset B, you might get 7% in the first 5 days. Okay, there's a tremendous bull run. And then you can exit your position, therefore freeing up your capital that you can then use for other opportunities. That is the essence of trading. Trading is the quest to become extremely efficient at risk-taking because of market timing. Now, as a comparison, let's go back to, investing. Let's go back to, what our parents were used to, what people were used to in the 1950s, 60s, 70s, 80s, and 90s, when basically, the Dow Jones, the S&P, and global equities were just growing after the wars. So the average return on the S&P 500 is about 9% per year, with 18% volatility. The all-weather portfolio that was created by Ray Dalio delivers on average 8% per year, with 11% volatility. The global risk parity portfolio, which I created with my quant student, is delivering 8% more or less per year with 10% volatility. Okay, but remember that these are average returns. Okay, so some years can be better, some years can be worse, and if we're talking about the S&P 500, if you look at these rolling returns here, some years have been negative. okay? Because these are the rolling 10-year returns, and this gives you a much better idea of the returns you will experience in your portfolio. The average returns that everybody talks about are really not average. You have to look at the rolling returns, okay, to understand how your portfolio is going to perform. And so, portfolio, depending on where your starting point is, you can either have a great run in your portfolio, or you can have trouble in your portfolio, or again, you can have a great run or trouble. The drawdowns really kill the performance and you will not experience that average return. Trading takes us a step further, okay? Trading is trying to do better, to be more efficient by going in and out of the market, hence avoiding all that drawdown and only participating when there is a probability of a successful return. And by repeating the process, by deploying your edge many times during the year, you're aiming to get more than this 8% with less volatility, or you're aiming to get 8% with less volatility, or 16% with 7% volatility. You're trying to be more efficient, okay? Because a trader's job is to deliver superior risk-adjusted rewards, okay? Risk-adjusted returns. You've got to consider the market as a store where you convert your trading capital into risk tokens. And then your job is to identify and exploit the discounts in the store, which allow you to gain large quantities of reward for a modest amount of risk. Okay, so a more quantitative mindset might say your job is to optimize the amount of reward you can achieve given a certain amount of risk. This is the essence of the Sharpe ratio, for example. So it really is not about the performance. It's about how much you risk to achieve that performance. So some concluding remarks. If you don't know where to start and you want to take up trading, then let me point you to something that's useful. My systematic trend filter. You can go and reach this at buildingatrader.com/the systematic trend filter. Okay, this is a non-discretionary trend filter, no indicators required, but it keeps you on the right side of the market. The other thing I'd like to remind you of is that my partners at FCI Markets are always ready to fund traders. Okay, so you will not trade your money, you will trade their money. Hence, there is no risk of you losing your money. Okay, and this is the pathway to becoming a professional trader, because anybody who knows how to trade should have the objective to trade other people's money, okay, so that they don't risk their own money and they can focus on the process and focus on generating a good performance without being under pressure. This is the pathway that I've designed here at Building a Trader, and I hope that you will take it up. I hope this was interesting, and I look forward to sharing more insights with you in the future episodes. This is Justin Paolini for Building a Trader. Over and out.